Welcome back, guys, to our Getting Started series for SCM Forex. We are trying to get you from application to application, from filling out your application to applying your strategies in the Forex market. And so today we're going to focus on how to actually place side orders in the MT4 platform. So since we're actually getting into orders, although it should be self-explanatory, we want to make sure you understand that any symbols you see today are simply for educational purposes. Trading Forex, there is a risk of loss of money. Any backtesting you see is just to show a strategy. You must make sure that you're trading at your own risk. So again, today is about placing orders in our MT4 platform. And so basically there are several types of orders. There are market orders, our stop orders, buy or sell stops, limit orders, buy or limit, and then we have our trailing stop. So what's the difference? Well, in essence, a market order is when you simply want to enter the market at the current price. Whether you're buying or you're selling, I just want in. And so you can enter a market order. A limit order is when you want to enter the market at a specific price. The same could be said for a stop order. However, that stop order is only after a specific price has been raised. So let's take a brief look here. So again, a market order is, let's see here, we got this little chart here and basically 1.3082. So if I wanted to get into the market right here, I hit buy, I hit sell, I'm in the market at whatever the spread is. Of course, we all understand that Forex market is all about the spread. So a market order gets you in. In a liquid market, euro dollar is a liquid market. Basically, wherever the bid and ask price is, depending on if you're selling or buying, you'll probably get put in at that price. However, in a volatile market, like today is their FOMC, although it really was kind of a dud, but when there's news, when there's something going on and the market is volatile, if you go market, you risk what is called slippage. You risk the market being right here, but maybe being filled up here because it was so volatile that it spiked up when you hit market. And that's the reason many people don't use market orders, is because of that slippage. However, if you don't use a market order and you use a limit price, you're not guaranteed to get filled. You're not guaranteed to get in the trade. So you have to make that decision. Is it better to be in the trade, or is it better to be in the trade at the best price? That's a decision for you to make. So again, the market order puts you in at the current price of the market. Again, bid-ask price, again, in a non-volatile market, in a liquid market. But when the market is volatile, if you go market, you have a chance of the market moving while you're hitting the button to go in, and you can increase the pips that you need to break even or to gain profit because of that volatility. So what about a limit order? Well, limit order is what you want to use to get in a specific price. So in simple terms, what do we have here? We're down here, we're up here. I think we can all agree that is an uptrend. That's a whole other video. And then now we have a pullback in this uptrend. However, we do have potentially some lower highs. But let's just play along and say we have an uptrend. You can see there's support here. The support happened here again. So I want to be long this market because it is in an uptrend, but I want to be long at a specific price. So I see the support here. I see the support here. I want to be long here. So I will put in a limit order to buy the market because I'm in an uptrend, but I only want to buy at support. I want to be a wholesale buyer, not a retail buyer, but that's another conversation. And so I'll put a limit order right here to, when the market pulls back to this price, my specific price, please get me in the market. Again, with the limit order, you're not guaranteed to be filled, but you are, if you are filled, you are going to get filled at that specific price. So a limit order is when you look at the market, you make your analysis, and you decide, if then. If this happens, then I want this to happen. So if this market pulls back, I believe we're in an uptrend, I want to put a limit order here. So that is a limit order. I also could say, you know what? We're making lower highs. So if we come back up to here, I want to short. So I could put a limit here, a sell limit here to short the market because I believe the market has turned and I want to go short. Does that make sense? Again, market order would get us in right here. Wherever the price is right here, that's where the market's going to feel you, buy or sell. A limit order is in a specific price. Why does one do that? Well, again, if the market is trending, you may want to buy at a better price, the best price. Well, not the best price, a price. Or you might want to sell at a price. And so if then, and I certainly believe in being an if then trader, that's what you're going to do on a limit. Now a stop order is a little bit different. So again, we said this was an uptrend, and now we have a potential downtrend because we have a lower high here, we have a lower high here. Well, you know what? If we break this support, we said this is support here, we said this is support here. If we break this support, I want to go short. So I could put a sell stop down here below all the action. And so if price moves down and breaks this price level, I want to get in short. Consider that a breakout trade. Similarly, if I'm going to stay with my uptrend and say the market is now going back up, we've pulled back and now we're going higher. Well, I said this was a lower high. So if we break this lower high, I think we're going to retest the high. So I might put a buy stop at this price because as the market comes up and breaks this swing high and goes to retest this high, I want in. So I make a limit says I want to get in below the current price, a buy limit. A sell limit says I want to get in above current price. Flip that, a buy stop says I want to get in above the current price. And that sell stop says I want to get in below current price. The rationale is breakout trading. We also can use stops as our risk management tools in terms of trailing stops, in terms of money management, managing our trades. Sometimes people use sell stops and buy stops in order to manage our trades. So that's the difference. A market puts you in right at the price. A limit puts you in at a specific price. A stop also puts you in a specific price. However, a limit usually will get you in, a buy limit below market, a sell limit above market, and a stop, a buy stop is above the market, and a sell stop is below market. But we can get in more into the rationale later. It's just most important right now for you to understand what the difference is and why we use them. So let's pull up in our second part of this video. We're going to pull up our MT4 platform and show you how to put in our market orders, our limit orders, and our stop orders. So check out the second part in the next video.